It is. We do like the software space. We think that plays into the mega trends that are ongoing amid the macro risks that still remain as we're seeing play out in the market today. So that is a space that does look more stable and has held up better than some of the other tech spaces.
Yeah, software, cyber, cloud. Basically, your view is to stick with those areas. They've done better than most so far this year, but be wary of the consumer. Why?
Well, you want to stick with what's outperformed. I think the market has been giving us a good signal. The consumer's weak. It looks like going to continue to be weak in terms of tech spending because there was just so much spending during the pandemic. But we're seeing that corporate budgets are really holding up pretty well. Corporations are using technology spending more as a strategic approach rather than a cyclical approach. And that's really playing into those mega trends and helping to support them, propping up the cloud computing sector. Cybersecurity still looks really strong.
To that point, Yang, even Cisco yesterday on the hardware side held up better than I think many had expected. Chuck Robbins talked about surprising strength even in places like Europe, no weakening in demand. So what has changed this week? Why is the NASDAQ, why is this rally, which was never really very loved in the first place, come to a halt?
Well, first on the point of Cisco, Cisco does play into a lot of those mega trends as well. So let's keep that in mind. Even though it is there's a hardware focus, there's also a software component to Cisco. So that is a very strong name that does play into many of those mega trends. I think there are ongoing macro risks. When we look at the big picture, it's still the case that interest rates are a concern. How tight the Fed is going to get is still a concern. And the market overall might have gotten a bit ahead of itself in terms of taking a dovish approach to the Fed's messaging. And I think we're seeing that play out today with interest rates jumping a bit, some concern about what's going to happen with the Jackson Hole meetings and the messaging that might come out of that from the Fed. So overall, a more balanced approach, but still something where a good amount of tech spending is holding up well.
Right, and Jackson Hole is maybe making the market a little more jittery about the Fed's trajectory. As you said, maybe gotten ahead of itself. What about the growth names that we have seen rebound over the last 6 to 8 weeks? What could propel them forward, or do you think that they are now sort of caught up in that macro picture, despite what Cisco said, that the earnings season for them is going to be tougher?
I think in the near term, we are caught up in the macro picture. I think the focus is going to shift now that the earnings season is starting to wind down. The focus is going to shift to the Fed, to interest rates, to growth, and it's going to be dominate the headlines. So we're going to have to see how that plays out. And then once we get further into the next quarter and we start seeing how earnings are holding up, that's going to start to turn back to how spending, where spending is going, how it's holding up. But right now, the macro picture is looking to dominate for a while.